July the 18th, 2019, and it's almost 7:30 a.m. in London when I'm doing this market update. Let's take a look at the markets, and let's just begin with mentioning that I just bought a bit of the S&P 500. I put that out as well on the Twitter account. So you have lows here from last week, and then you have these levels down here. So stop loss is per that. What's up? Let me see if I can load that. Just give me a second. There we go. So you can see here, I just bought here. I bought this September contract, but you can trade the CFD. The normal CFD doesn't matter too much. You see, I just bought here. You see stop loss. This is last week's low, and then you have another low here, which is the low from. Well, there should be the low from. Pretty much. According to this chart, July 2nd. Key point though is pretty much around last week's low. That's it really. It's a 1% risk on this one, and obviously I wanted to go up like that, if not higher, given the way the whole thing looks like. As you might remember, we had a bullish breakout here just a few, like, this is a weekly chart, so 1, 2, 3 weeks ago, 2 weeks ago, 2 to 3 weeks ago we had a breakout. So this should really move up higher, I think. And it's just a small risk, really. 1% is not too much. Initial residual ratio here is going to be something like buy here 1.76, but I think we can go upwards, and then of course maybe we'll get a bit more. I'm not saying how much more, but we can definitely go up higher. Now let's take a look at all the other markets, and then we'll take a look at more of the details. It's always good, even though I'm not have any strong interest of trading something like the Euro versus the USD, it's always good, I think, to just look at it and see what's happening. Just want to make sure here that we're live. Yes, we are. Good. So your USD is moving upwards. There's not a lot of activity here. The idea was to buy here if you wanted to. Stop loss below 111.81. Take that level out. We might go down a bit, but I wouldn't get too carried away. It's probably going to trade a little bit lower, and then that's going to be the end of it. GBP versus the USD. Here we're dealing with a downtrend. You have that break to the downside, and we're having a bit of a correction now. And I have my entry order to sell at the, I think I told you guys, the 65 level. We'll win as high as 57, and that will be the first fib. And I have it at 65, which is pretty much between the first and 50% pullback level. I don't really think we're gonna trade much higher than like 29, 25, 30. But GBP USD is notorious for correcting quite substantially. So because of that, I don't want to put my stop loss just above here rather than putting it up here. Let's see what happens. As you know, I'm anticipating this to go much lower. Dollar versus the Japanese yen is challenging that low now. And if we take out that low, we might resume that weakness in the dollar. Might go down to something like 106.74 and then potentially lower. As you might remember as well, I do have a Euro yen trade idea, so we're going to look at that in a few minutes. Here's the Aussie dollar versus the USD. I don't know exactly what the numbers were. Actually, I can see here the employment change. It missed actually. So only 500 new jobs were created versus 42,000.3 prior. Let me actually see here what it's all about. Yeah, so estimated was 10,000. Okay. The unemployment rate though remained unchanged according to FX Street. So here You have a bit of a head and shoulders. You got that little break to 70.49. Can take that out. Potential trade upwards 71, 71.50. But I wouldn't get too carried away. I don't think there's too much momentum that's going to help here. But here's a nice little head and shoulders. Maybe a little bit of a scalp can be sufficient. NCD versus the USD, it does maintain a bit of a bullish bias. But as you know, this one has been a bit complicated. We did have a few setups that we could work with here, but after that, I'd rather just ignore this one. Remember, what we're doing here, right, is we're selling dollars, right? When we buy this, we buy the New Zealand dollar. So just from the onset here, we can trade this one. Aussie dollar is much better. Or we can just buy gold. So it's not that we're not selling dollars, it's just that we're not selling dollars in that specific pair. And dollar CAD, the market strength size has been 113.17 and 131.46 with a break to the downside, most likely taking things lower. Dollars, you see, I'm finding this very complicated. It definitely has some bullish momentum above 96.96, which is this level down here. And I would like to see this consolidate between this level and this level. When we take this out, maybe we'll turn bullish, target the highs. Alternatively, take out the lows, we turn bearish. Now these are gold prices. Now if we get rid of all the different lines here to sort of clean this up, is the close we saw yesterday, right? It was a good close. It's the highest close we've seen for this year, and definitely closing above this level and this level and this level. And the only thing here, I got an entry to buy at 114.30, and literally at 11 p.m. when the market opened, it sort of soared up towards that level. I got triggered, and then it went back down. And if you look at this from sort of slightly different chart, you know, we haven't really cleared the highs yet. So I said to myself, let's see if the Asian traders are going to pick this up, because it was those guys that bought on their way up here, push things up in the middle of the night. So I said to myself, let's see what they do. It's not going to happen too much overnight anyway, I said. I mean, either they buy or they don't buy. So they didn't buy and just left the currency hanging here. And when I'm looking at this today, I just bought a bit more up here. I am already long from 14.08 down here. The total risk is actually not that bad, 1.6% or so. So it's not high risk at all. However, I'm looking at this today, and you know it's been swinging up and down and up and down. So I said to myself, let's forget about this one. So I just closed it out for a tiny loss. I think 0.4, so 40 basis points, so less than 0.5%. And I said, if it goes down, I might be able to buy on a dip. So I might be able to buy down here if I wanted to. If we load everything, we said look to buy here yesterday. I know some of you guys did. And I put the fibs on here. And you know, maybe we'll go down to something like 14.11, 14.08. So it's my same entry. And if we would go down to these levels, not saying we would, but if we would, you know, I'll just buy maybe a bit more, because the risk on this one right now is minusculous. I think it's like again 0.5% from being 1.5%. At the same time, you know, I'm gonna put an entry order just above here, because I think next time we take this out, it should hopefully be okay. And I think potentially, realistically, you know, if we buy here at 14.30, you know, we could maybe get away with a stop loss at 14.08. So that will be a $22 stop loss. So suddenly we might actually be able to buy a bit more here after that correction. Crude oil prices are just at support, right? And definitely a bit of a sort of definite change in the mood here. And I have a feeling that it's going to try to take out those stops, and it could be the beginning of slightly more decline. But it's always good, you know, take a look at this from the big picture. So this is your daily chart. So clearly, you know, take out low and probably just slightly lower. The question is by how much? Well, maybe down here to 54.34, but I wouldn't get involved here. It's a difficult situation, and I don't think it's well at all. All right, this is the S&P. So yesterday I said, well, not even, I think even before that, I said people are probably going to buy here somewhere, right? And it's very similar to the dips we've been saying and looked at before. So I didn't buy up here. I just bought down here. So we have that decent risk reward ratio on this one, and a bit of a sort of exaggeration. And hopefully this is going to be it. This is the Nasdaq 100. It's also in the buy zone. In fact, when I look at this right now and I think about it, this is even a better situation than the first one, because usually, like in the S&P, when the price comes really close to the stop loss, you will get fortunately stopped out. Here is still at the healthy 61.8% correction level, and you still have that low down here. This is an alternative. You can buy this one if you don't want to buy the S&P. And this is the Dow. And the Dow, I actually got an entry on this one, and I'm in a bit of profit. Let me show you the Dow using these charts. So you might remember the idea was to buy at the first fib, which I did. So this market could add a little bit more to its losses down to the breakup points, another 184 points. But I would be really surprised if we trade much lower than this section here. Stop loss is down here somewhere. The risk is definitely slightly higher than I would like to, but it's okay for now. To give you an idea, on the way up, I had the position here is just half of what I had on the way up. But if you look at it from the S&P, I guess we're pretty much back at full position. As for the German DAX, unfortunately, I got stopped out of this one overnight. As the market turned at 10 and it was about to close, I got stopped out. Don't remember exactly how much the loss was, but it's in the WhatsApp. There's not too much to do about this. European markets have been underperforming a bit. Hopefully the European markets are not going to continue to weigh on things too much. In either case, I'm not holding in a position in any European market right now. I'm holding a position in the S&P 500 and in the Dow, which has been one of the better markets. And I guess if it totally fails, maybe we'll at least see gold gaining a bit. All right, let's take a look at my other preferred market. So this is the Holland or Netherlands stock market index. So it's still lingering around the lows here, sorry, the highs, and it's struggling to trade much higher right now. But it's maybe building up a little base. On the pause, maybe it's either going to do like this, spending some time and then trade lower, or eventually, maybe spend some time and then trade upwards, hopefully upwards. That would be a good opportunity to add a bit of risk to this whole stock market idea. French stock market is actually turning lower right now. It's trading below support, a little bit like the Aussie stock market to some extent. And 5658 is the level I'm watching, so take that out, and I think we could potentially sort of start to go upwards. But right now it's obviously a bit of pressure. We talked about yen, so this is something, euro yen very close to trading lower. So next week we have the ECB rate meeting, and the market is projecting next week we have the ECB rate meeting, but in the September meeting, the market is projecting a rate cut of maybe 10 basis points, which would be an under. It would need to cut more, really, maybe 20 basis points, because what's happening now is that long-term government bond yields, they are at more negative sometimes than what the deposit rate is at the EU's. So what happens is that the banks are just minimizing losses, right? So what they do is that they take their positions or the money they don't lend out, and they put it just with the central bank. So to encourage them to lend out, if they cut the deposit rate, is going to be more painful for the banks, and hopefully they lend out more. Not sure that's going to work out, but I think that's what people are saying. Well, that is what people are saying. Here, though, you have very close to support. Maybe we'll take out the high here. So say if we take out something sort of the low, 2064, if stop goes just above the high, we'll be risking about wow, that's not a lot, but 60 pip. And if we reach the target, we can trade lower. This is a nice rectangle. Risk reward is just 4.1. and it can even act like a nice little hedge even. GBP USD, that intruder is still in the market, and I think that's pretty much it. So most likely what I'm going to do now, maybe try to create an order just to buy gold prices, and I'm probably gonna create an order to sell the euro yen, and then we'll just take it from there. In the case of gold prices, it's just gonna be that breakout to the high. Might buy a little bit on the dip, but I'll take it as it comes. It's a little bit like the S&P. I wake up, the S&P is at a good level to be bought, and I just buy it. That's it really. Might do the same with gold. Okay, see if you guys have any questions. So no questions. So we're gonna wrap things up. If you have any questions during the day, you're most welcome to reach out. Some of you guys do that, some of you guys don't. If you don't, no worries. But if you want to reach out, free to do so. If I'm busy, it's just gonna take longer for me to reply. But you're not bothering me, so feel free to reach out. Thank you, and I'll speak with you guys later. Bye bye.